Next is a concept-based question of non-banking finance company. So before answering this question, we will have an idea what is the major difference between bank and a non-bank financial company or NBFC. So NBFC, like bank, they give loan, they lend, they make investment. So there are many common functions which both bank and NBFC perform, but there are few major differences. So three important differences between a bank and an NBFC is that, first one is that NBFC cannot accept demand deposit. They can accept term deposit, but NBFC can't accept demand deposit. That is first point, first difference. Second is that NBFC do not form part of the payment and settlement system. They are not part of the payment and settlement system, and therefore they cannot issue checks drawn on itself. So NBFC, unlike bank, cannot issue checks on its behalf. Third is that the deposit insurance facility under the Deposit Insurance and Credit Guarantee Corporation is not available to depositors of NBFC. So for banks, we know that under the Deposit Insurance and Credit Guarantee Corporation Act, there is a deposit insurance of up to 1 lakh, but for NBFC, this deposit insurance is not there. So these are the three basic differences between bank and NBFC. Now we'll try to solve this question. The question is about the difference between bank and NBFC. Banks can accept both term and demand deposit. That's the correct statement. Whereas NBFC can accept demand deposits only. That's a wrong statement. NBFC can't accept demand deposit. That's not the correct difference. Banks are authorized to issue checks of any amount, but NBFC can issue checks up to 1 lakh. No, NBFC on its behalf can't issue checks. That is also not the correct answer. Bank deposits have insurance cover of Deposit Insurance and Credit Guarantee Corporation, but it is not available for NBFC deposits. So that is the correct difference. So C is your answer. C is the answer.